Yeah. All right, guys. So I think we have got some people attendees already. I mean, I think we're just going to start straight away. Okay, first and foremost, I'd like to apologize again for being late, and thank you very much for coming this evening. Okay, very good evening to familiar names. I can't say familiar faces because I cannot see your faces yet. We are going to be today is a it's the 28th of March. We are on the geometric life analysis session that happens every Monday, okay, which is supposed to happen every Monday, 1 p.m. GMT. Okay, so let's get a start on it. Okay, I have actually looked into the market today, and there are a lot of expectations in the market with regards to breakouts. We are looking at a couple of pairs. If you guys have got any suggestions on pairs to look at and all that, you can give me these suggestions now. But then I'll answer your questions once we end the webinar. But in terms of pairs, you can always type in the chat box on the pairs, and we will get to that. I just want to check again. You guys can hear me loud and clear, and you can see my screen. Yeah, just in case. All right. So I have got a couple of brilliant, Colin. Thank you very much. GBP USD. Okay. Let's look at a bit of GBP USD first. There was a pattern that we have looked at since last week. I mean, a lot on the downside, if I'm not mistaken, if we're actually looking at that. But let's just travel onto the GBP USD at the moment, and let's see what's going on. I'll start off with the daily chart just to look into the big picture of it, since we just to follow through on what we've spoken about as of last week. We've got some, let me just check, we have got some downward momentum due to the couple of well, we've got the theme could be Brexit as well, but again, we have got some recent news about investors going against the Brexit idea. Okay, so now we've got involvement of investors saying that it wouldn't benefit them as investors. So that is quite that would be quite an impact to the decision as well. Okay, but in terms of the three EMAs that we have actually looked into and a couple of other indicators that we have seen, if you're based on the daily chart, we're looking at still price action wise, they're still under the three lines that you can see on the daily chart. In terms of angles of using the clock angles, as you guys can see, we're just looking at the daily chart first, just as an idea. It's not to decide on anything just yet. As you can see, we have got an angle that I would say close to a 5 to 6 o'clock angle, signaling some probabilities on the downside. So we have got some price action as well. Meaning you've got resistance hitting on the EMAs, especially recent prices have actually hit the 50 EMA. So we're looking at some resistance bouncing off the EMA, giving you some signals on the daily chart on to the downside. If we move on to the 4-hour chart, let me just give me a second. I'll just try clearing off that drawing I've just done, and just to measure the whole seismic of the market at the moment with no intentions of trading it or deciding anything just as yet, because we have got some between the time frames of 1 hour, 4 hour, and the daily, we have got some sort of conflict in terms of mismatches of prices, not really in sync in all time frames, meaning they're not all under the three EMAs or exponential moving averages. Some like the 4-hour that we can actually see here, we have got price action having a bit of a momentum on an upward trend, as you can see on the GBP USD hourly hour 4. Okay, as you can see, it tried penetrating through the 50 and 100 EMA. It's aiming towards the 200 EMA. So we have got some strength. We've got the strength of candles itself giving us a bit of an indication. Now, if you guys remember, we have seen, I think it was Colin, if I'm not mistaken, Colin, you've actually asked about a flag and pole pattern. I think it was the GBP USD that you've mentioned. There were some indication. We're going to visit that on the 1 hour chart and look at sort of patterns that we can look at. Now, as you can see, I want you guys to also notice the price action. We've got a price action. Let's look at the price on the GBP USD. We've got it trading at 1.4237. Okay, let's omit the fifth digit. Look at the 4238. Now, the 4238, as you could see, if it were to pick up on its strength, would lead to the 40, 45, and eventually the 50 site number. Now, if I were to use the crosshair and go very close to the 200, just roughly, 200 EMA, you could see that we've got a bit of a risk area at the 1.4250 area. Now, the 1.4250 area, with the last two digit being 50, is the one of the psychological level that we have talked about. We have got 20, 80, 50, and the 00. If these are the last two digits, these are probable risk area and significant support resistant area. So we have got prices giving a bit of a momentum moving upwards, but then we've also got a bit of a risk or resistance area, we can say that, within that zone of 1.4250's area. So again, for those who are new, we are using the EMAs as sort of an indicator, not the crosses for entries. In this particular strategy, we're not using crosses of EMAs or MAs as your entry or anything like that. I'm only using the EMA strictly as a trend indicator. Okay, so at this stage, we have got prices going up on the 4 hour chart. It's appreciating in value, but we have got a bit of a resistance or risk area, a risk of it actually correcting at the 1.4250s area. But if we were to move downwards onto the 1 hour chart, we have also got a different picture. It has actually penetrated through. Okay, now if I were to erase that bit there, this is GBP USD on the 1 hour chart. Now the thing is that with the Fibonacci, I've got a bit of a pattern going on here. All right, if I pull this one here, we've got a bit of an ABCD here. Right, I think we've mentioned the same sort of pattern here expected. You have got prices. If this were to be the A somewhere here, and then you've got the B, the C has been plotted quite close to the 61.8% here. Okay, so we're keeping that in mind on the 61.8%, and once we pull the 61.8%, according to the menu that we have talked about, remember let me just show you on my PowerPoint presentation. Give me a second. Now we have got the Fibonacci. I should have always opened this table in advance, but I was in a big rush. So give me a second, guys. We have got all right, there you go. So we have put that C point in mind, so 61.8, yeah, remember? And we have got a projected D point at 1.618. Well, probably. Let's check that out together. Now, if I pull the B to C, I would then have marked the 1.618 area as a potential, okay, area of take profit. But of course, we would like to further tweak the price that we have projected based on a psychological level. But let's do a little bit of geometric pattern there. We will start off with the ABCD first. So we've got the A to B, and if I just double click that one there, as you can see, that CD was quite close to the projected price that we have initially plotted. Okay, so that's an area that would be an area of risk as well if you were taking that uptrend move for the GBP USD, whether it's based on a 1 hour or lower time frame. Then you're looking at your take profit area there. But again, you know, based on the mismatch, me personally, I would monitor and wait for the prices to give me more hint of an upward strength or a downward strength. But at this point onwards, based on a 1 hour chart, it is actually trading at 1.4247 now, or 48. So that's just 2 pips away from the 50 psych number. So I would need to look into prices going above the 50 psych numbers first before I could make further decision. But based on, for purely practice purposes, if I have got that pattern there, as you can see, it's the ABCD pattern. All right. Now we have got a pattern like that, and that would be sort of your area that you would have exited if at all you were into a trade on the buy side. But where would you then enter the market if it were to be this simple ABCD pattern that you've drawn? Okay, as easy as connecting that bit there to that bit there. Let me just attach that. So we have got a sort of cross now. That would be your ideal entry point at 1.4147. But again, you see 14147 wouldn't be a good price for you to buy. So where would you actually then have an ideal entry point? It would be above your 50. So you're looking at 60, right? 4160. So 4160 would be better. So you've got a 4160 level for your entry, okay, and then you have got marked here as your 4230, let's say. So your 4230 is quite ideal, or you could even look into your 4240, but it's probably best to go under that 4230 area. So to be conservative, you want to go under that 1.4220, which is exactly what we've plotted before at 4210. So have some of you benefited from this trade at all? I remember, I think it was yourself, Colin, or anyone else who have thought of a buy entry, and we have plotted those prices, I think. Okay, I've got some question. Osama's question is it necessary that the 3MA has to be above or below the price to enter the market? Let me clarify this, Osama. We're looking at the candles being above or under, yeah? We're looking at the candles. You're concentrating, focusing on the movement of candles. So let me repeat. If the candles, majority of the candles depicting the price now, if they are above the 3 EMA, not MA moving average. I use, well, it depends on your strategy as well if you're used to. I mean, based on this one here, I use mostly the EMA, the exponential moving average of 50, 100, and 200. Okay, it is best for the candles, majority of candles, to be above all 3 EMAs. All right, so you have also stated, example, if the 200 EMA, sorry, if the 200 is above the price. No, it's the other way around, Osama. You need to be careful here. We're looking at the price above or under, not the EMA itself. Look at the candlesticks. Okay, let me give you a bit of a let me give you a bit of an example. Okay, now look at this area here, right? Look at the candles. Candles are above all 3 lines here, correct? This is what we're talking about. It's the candles. Candles above or under all 3 lines. All right? This is the important part, not the other way around, okay? All right. So Nicholas has got a question too. Is the flag and pole pattern on Euro USD we drew last week still valid? That's a very good question. We're going to visit that one there. I think it's extended. The flag pattern has actually extended tremendously, but we're going to visit that. I'm going to cover that right away. Okay. Osama, is that clear for you on the charts? Sorry, on the candles being above the 3 candle, not the other way around. Okay. Good one. So let's go on to Euro USD. All right. Now, Euro USD, we have got the flag and pole pattern. Let me draw up the flag part, okay, and then mark the, we have got indeed a flag and pole pattern. I would look at it as still reasonably valid, but let us verify that with the current trend position, okay. It has broken up very nicely. Let's look at price action. Price action on the 1-hour chart for the Euro USD has actually not only penetrated through the channel, which made the flag part of the pattern, okay. We have also the flag part right here, okay. So we had this flag and pole pattern. It did extend quite well, but again, I would answer that question by saying yes, it's still valid. It has actually gone, it didn't actually go beyond this flag area. Yes, it did actually had an elongated journey, but sometimes the good news is this. Usually, and in most occasions, if the flag is reasonably long, like in this case, I mean, it elongated quite significantly, that also would alert or signal a reasonably significantly big move upwards. The push price action wise would be bigger. Okay, of course you could actually target, we still have that area there, as you can see, 1.1344. okay, so this is indeed a nice pattern, but you've got a risk area, guys. Okay, not the risk area, the risk of this is this. Sometimes you have got a flag pattern like this, but it could easily be that it makes that turnaround here before going higher. All right, this is quite a common move by from the flag and pole pattern. Okay, but this could happen. This could not happen. I mean, the bounce back or the correction is all due to the market momentum. Okay, now shall we look into how strong the trend is based on the ADX at the moment, the average directional movement index. Okay, if I were to, let me just erase that first. Give me a second. All right, now let's say if I were to insert the indicator, that's called the average directional movement index, which is ADX for short. I make sure that I have got the level 25, okay, onto my chart. Right, now this is the trick, guys. Okay, when you are looking at a breakout as such, you would like to measure the strength of the trend. It doesn't matter whether it's a downward strength or an upward strength. You use the ADX in such a way to actually give you hints of whether the current trend, which is an uptrend at the moment on the Euro USD, correct, it's broken out upwards. The question is the current trend strong enough to give you more momentum? Now, based on the ADX, the line, the blue line, we're looking at the blue line, forget all the other lines, the blue line is still under the 25 level. Usually if it's above the 25 level, it signals more strength. Okay, now based on the price, what about the price? 1.1198. Isn't it very close to the 00 psych number? As you can see, look at the price action itself. Look at the behavior of the price. It is still playing about. It's not the earlier on you looked at the elongated candle, right? The candle were actually, I mean, the candle itself went. You could see the strength. It was you know, just strengthening. Right, but suddenly now when it approached 1.119899, because it's too close to the 00 level, it start to have a think. Look at what is happening. You know, it looks like it's just bobbing around that price at the moment. You know, and this is the risk area. There is a risk area at the 0 level. So in order for us to look into better price action, we would need to wait for it to go beyond the 0 level. Okay, at least by 10 pips. So we're looking at an ideal entry above the 1.1210 area. Okay, and then to be more conservative and also to measure more strength in the uptrend, you could actually choose the 1.1220 risk area to determine the strength of the euro and trade an entry on the long at above 1.1220. So ideally at 1.1230 if one is being conservative. Okay, so I'm just typing the ideal entry price being conservative, 1230. Oops, 1230 that is. So I'll just have that price right there. Okay, now we have done a bit of a forecast on the take profit area at 1.1344. Now 44 last two digit being 44 is only about 6 pips away from the 6 pips away from the 50. All right, so we would like to then take profit at least 10 pips below the 1350 area. So that would give you at 1340. Okay, let me just, right, 1340 would be an ideal exit area. All right, so that is your area of probability, probable trade area. Okay, and you've got your reversal area being right there. We have got the risk area, as I've said. Take profit area is too close to the 1350 area, so we have taken that at 1340. So we're just looking and monitoring price action at the moment. Indeed, that breakout has happened. Okay, it was a little risky, meaning visually, you've been looking at how prices have actually been playing along that channel, but for a flag and pole pattern, it's a reasonably long, but again, about time it actually broke away and it has gone above all three EMAs, and as we can see, it's actually strengthening 1209. Okay, it's approaching the 1210 area. It could be for some that you would like to enter at 1210. For those who are more conservative, you're actually going to be entering at the 1230 area. So you have got 1230, 1340, close to 100 pips or so. That looks quite nice based on the 1 hour chart. All right. So that's what's going on, guys, for the Euro USD. We've not actually touched on the other areas of news and things like that. Now, what about like Colin and the rest of who've been trading the Euro USD? Have you guys noticed anything on the first steps of before you trade? On the based on the price model, PRIC, on the P itself, any potential trades, any potential news that you have actually sort of noticed that would have been an impact to the upward move for the Euro? What about you guys? Maybe you guys could actually tell me anything that you guys have actually noticed on certain sites I've recommended as well. I will firstly visit the megatrendfx.com. As I've mentioned, it's just a site that gives us a bit of an indication of trend as a whole. Now here, I would like to share with you guys based on potential trade ideas for the week. Okay, let me just refresh that on the daily chart. Now, this is where I've got some questions as of last week about the heat map or anything that would give us an indication of strength of the pair or strength of the currency. Now, I would like to just hint you guys, for me personally, I would be more interested in an indicator like the one I'm showing you now that shows me not strong pairs for the day or or weak pairs, but strengthening pairs and weakening pairs. I'll just demonstrate what I mean. Give me a second. We'll just give it a few seconds for this, for the data to upload. I will be looking at the daily chart for this mega trend, but meantime, while we're waiting, we can always go on to EFX News, efxnews.com. Of course, these are best to be done early in the morning. I mean, morning your time, of course. The earliest you get to the news, then the fresher they are for the EFX News. And let me just, I'll just go on to the all EFX articles section. Let's see what has actually happened. Any of you guys notice any movements at all? Simply type, I mean, any news or the impact of the euro versus the dollar has been, you know, which news you think have actually, what are the hot news that have actually popped up from the weekend up to today? Now, based on EFX News, as you can see today, the 28th of March, we have got, look at the first article itself, a warning signal for JPY longs. Now, there are some warning signals there. Have we actually noticed some risk area for those who have actually been selling the USD JPY, because they're talking about JPY longs? Okay, so if you are longing the JPY, you would be shorting the USD JPY. Okay, so that it's giving you an idea or a hint that there may be limited upsides for the JPY, the yen in general. Okay, we have got something concerning the Japanese investors. They are purchasing 2.3 trillion in foreign debt or debt or something like that, and it ended March 18. So there are some significant impact, I would guess. We will visit that in a while. I think I've got some questions. Inflation in US dollar. Yes. Colin, that's a good point. Very good point. Now, I would like to clarify. We have got inflation. We've also got hyperinflation. Okay, it just means that one is stronger than the other. Okay, hyper, like hyperactivity, okay, of the inflation rate. Now, inflation, I want you guys to question this. Inflation has got a lot to do with the supply of money that has been printed, whether it's through stimulus, through all the programs and the models that they are actually doing. And once that is flooding the market, then you have got inflation. Now, the thing is that I would like to also give you guys a bit of a hint. We have got, I remember we've talked about this, you have got data releases. Now, data releases, a lot of you questioned that last week as well. We have got retail sales, for example. Now, retail sales of cars. The US, you know, they factor in retail sales, for example, but they also include the cars delivery to dealers. Okay, so when the cars are delivered to the dealers, they are not necessarily factoring the real sales number, because the cars could reach the dealer and not be sold. But then the US have actually factored all that in as sales. So there itself has got a lot of loophole in the accuracy of the data that has been released. All right. Now, lately, as of last week, I think it started 2 weeks ago, we have had many news in Bloomberg, CNBC Asia as well, questioning data that has been coming out of the US. And lately, we have got loads of news about the collapse of the dollar, meaning that the devaluing of the dollar, the depreciating or falling of the dollar as well. So there's a lot of news been coming out on that. Okay. All right. Nicholas, we have got, I think I've answered your question already, Nicholas, on the flag and pole pattern. Yeah. The answer to that is valid. Yes. Okay. And anything else that you guys have noticed in the market? What about price of gold? What have you guys noticed on oil, gold, silver? Anybody has got any take on oil, gold, silver? Some of you guys I know are trading gold physically. What has happened with gold? Any ideas? Before that, we've got USD JPY, a new consolidation phase. The second paragraph, or the second news, sorry, second post, and you have got it released by Société Générale, the bank, and we have got BNP Paribas for the warning on JPY longs. So we have got, again, there's a lot of concentration on the yen, guys, okay? Now let's go back to the currency strength meter indicator that I've shown you. Now, let's look at yen, because you see, yen has been mentioned a lot, all right? We have got yen in pink, all right? Now look at yen strengthening all the way through, but look at it uh, based on the daily chart. It seemed to be a bit of a weakening, but let's not concentrate on the yen as yet. Let's look from the bottom. Could you actually notice pairs or this colored line that has been strengthening from the bottom up? You see this bottommost line? This one here is for the Canadian dollar, right? We have got a Canadian dollar looking like it's signaling some strength. And why? Because it's starting from the very bottom and it's going upwards, right? Now there's a strengthening. I want you to maybe write this down. You've got a strengthening Canadian dollar. Next, you have got the Australian dollar also expected to strengthen. Okay, this is just based on the meter, so that we can then carry that information and reconfirm, you know, re-verify or validify them based on what we can see on the patterns and other tools. Okay, so we have got both the AUD, US dollar. This is based on the daily chart. We'll go back to 1 hour chart in a minute, and we've got the CAD as mentioned. But let's look at from the very top. From the very top, what's seem to still be falling drastically from the bottom, from the top to the bottom, would be still the GBP. So we're still expecting some devaluing of the pound, okay, and also the dollar. But the one that's drastically moving is the GBP on the downside, and the AUD and the CAD on the upside. All right, you can easily combine the two and make some analysis on it just to verify the strength of that currency. So let's say I'm combining the GBP with the CAD or the GBP with the AUD. Now if I go back to my chart, all right, I've done that earlier today with just giving a bit of a look on GBP connected pairs. We've got a GBP CAD. Now look at what's happening here on the GBP CAD, because you know, based on the chart that we have seen, or sorry, the indicator that given us the strength of the pairs, or the strength of the currency, CAD has signaled loads of strength. Okay, but GBP on the downside. But here, as you see on the GBP CAD 1 hour, there's a lot of a strength on the upside for the GBP. It's totally opposite than what we've seen. But again, on this pair, GBP CAD, if we minimize that, all right, there is a possibility of an ABCD move right there. Okay, we've got the C exactly on the 38.2. So if I were to move that one upwards, we have a possibility. Okay, there may be some news factor, we're not sure. So again, it's a W-like pattern on an ABCD that is telling you that yes, there are some possibility on the upside, but let us consider where the limit would be. Okay, the limit for that on the GBP CAD, if I were to grab the A to the B, yeah, and we double click that and we bring it right there, the lower pricing, as you can see, that's where that could be projected to. Okay, roughly there. Now this is just based on the ABCD length, meaning AB geometrically would actually be the same in length with the CD. That is to project the D area here, right? But then before this rise in an ABCD format, we see a big move downwards. Okay, so if I were to look at it from this perspective, okay, we have got some movement there. I'm ignoring all the volatility that I could see there, and I'm just drawing a sort of a downward move like that all the way here. All right, all the way here. Now that is a probable, we don't know that yet until we actually look at Fibonacci, a probable W-like pattern. And that W-like pattern is signaling possibility of an upward move, but up to that area there. But again, let us start with a Fibonacci on the ABCD first. Okay, we pull the B to C based on the menu. If it's 38.2 on the C, you have got a possibility of 2618, which is very close with the initially drawn horizontal rate line, and the second option would be the 2.24. Okay, that is all based on that little table there. So 38.2% on C point would help you project D at 2.24% extension or 2.618%. All right, so you have got an idea there. Now, where would you then be entering your trade? By just using geometric style, you're just combining that there and looking at the center point. So anywhere above that could have been your ideal sort of buy point. Now let's evaluate further on Fibonacci. Before that, let me answer some questions first. Okay, Colin has got something on all pulled back, but in an uptrend, gold and all. Yes, absolutely. We'll visit these charts for these instruments. So that is what's happening for the GBP CAD. So this is also giving you hints whether or not you'll be looking at similar patterns. Okay, anything that's combined with GBP. All right, they are signaling on the medium to long term on the downside, but it looks like it favors some correction in the short to medium term before the big expected fall. Okay, it's looking like it. Now, a bit of warning as well. The announcement for a market, free market, is getting closer. It is expected to happen in June for China, so that would move. And there's a couple of Brexit-related things happening at that time of the year too. Okay, so let us just go on to Fibonacci. I would like to pull from there. That could easily be my X point if it is the W sort of pattern. Before that, let me just delete that so that you could see the W pattern clearly. Now, if I pull from X to A, there are some risk area because I have got the 78.6 around here. All right, I like the number 78.6. It's the how do you call it? The power of 61.8%. Okay, these are high probability ratios, 78.6 and 61.8. But I just ignore 61.8, which is right down here for now. But again, look at how prices have actually respected that level there, 61.8. Okay, so what I usually do is I try to pull from this area here, X to C, to sort of get more lines that are between 61.8 and 78.6. Okay, once you've got these lines in place, you will see that it sort of made up a potential PRZ or a potential reversal zone, which is that area there. Okay, so we are looking at expectation for a rise GBP versus the CAD or the Canadian dollar, and we've got some resistance area. Look at that zone and try looking at price action, support and resistance, and look at whether or not these candles or prices have respected these lines within that zone. And most importantly is to look at longish type candle passing through. Now, longish candle like this passing through a zone that I've marked in blue indicates a strong, significant support resistant area, okay, that usually could be penetrated through by power candles, big longish candles. So that indeed have had happened in the past. You've got various very long big candles penetrating through that exact zone that we have just drawn in blue, and we have got price action there trying to penetrate through. But most importantly, we have got loads of a concentration of resistance and support as well, with longish candles penetrating through. So that gives you a bit of a hint that that area zone there could indeed be a significant area. Okay, so if you were to looking into a buy for that, a ideal entry point has been marked there at 1.8734, but again, to appear more conservative, you want prices to give you hints of an up strength or an upward move above the 50 side number. Okay, I think I've got some questions there. We've got a question from Nicholas. We have got, could we use the same ABCD analysis on GBP? Yes, indeed. If you actually manage to spot the ABCD in any way on any pair instruments, by all means, yes. But let's look at it together then. Yeah, GBP AUD. Let's go on to the GBP AUD. Right. Now, GBP AUD. Looks like I've initially plotted a possible or probable flag and pole pattern, but this is a bearish flag and pole pattern, meaning you've got an upward move that is reflected by the flag here. Okay, so that is your flag area there. We've got a downward pole downwards, so we're expecting a break on the downside for this bearish flag. Okay, and Nicholas, you've mentioned about a similar pattern. So you're talking about flag and pole pattern, I would guess, or is AB? Yes, if it is an AB, if it is a flag sort of pattern, let's take that as a potential ABCD as well and pull that one down this way. All right, but because prices are trading within that channel, we should be waiting for a breakout from that channel, preferably on a downside to confirm that this is indeed a sort of flag and pole pattern. All right, now prices wise, before that, if this were to be A and then B and then the C have touched at the 50% level, I'm taking that away, and because based on the menu, if it's 50%, then the projected price for D would be at about 200 extension level for your fibs. Okay, so as you can see, the 200 landed very close to the AB sort of CD kind of pattern as well, so gives you a little bit of an idea that this could be a potential area once it has broken out of the channel though. Okay, all right, so that's basically it. A, B, C, D. Pole on this side and flag on that. So we've got a bit of a two-in-one sort of formation. All right. Okay, so we have looked into GBP AUD. We've got GBP CAD covered. Shall we look into a little bit of gold before we end at the moment? I just would like to show you what's going on gold. That's on the 1 hour chart. We've also got, let's say, the daily chart. Now, the daily chart's quite interesting because we have got, it's a lot, in the stocks, we have got lots of J-like pattern. They call it the J. Let me just wipe out most of these indicators first. Right. So, they believe in the J sort of pattern as well, but for me personally, based on geometric, I would prefer it to be sort of like a Z, not really very neat Z-like pattern. But we have got an expectation for the market to bring gold prices a little bit more lower. Okay, but if at all we are seeing this formation to be a Z pattern, then the downward move usually or theoretically based on the flag and pole pattern would go to the 50% level fib. So that is the possible area that prices could fall to. Okay, so that's the zone right there. And if I was to pull that one down here, we have got a bit of an alignment between the AB and the CD, so that's roughly expected, but that's for the daily chart. Okay, now let me leave that on the chart and draw that Z pattern that I was talking about. Okay, there we go. That's the expectation for gold to reach the 1166 area. Okay, but again, let's confirm a bit more on the 4-hour chart. Okay. Now here, if the momentum of ABCD picks up, you have got a chance for a ABCD happening here. Okay, there we go. Now, if I had look at ABCD, this very well signals a support area here. So that's sort of a danger zone to expect prices going lower at this time for now, because there may be a bit of a correction. And once the correction starts and ends around there, that would probably again create another ABCD sort of pattern. All right. That is for gold on the 4-hour chart. We've also got it, let me see. If it's based on a 1-hour chart, we have got prices, teasing the 50 EMA. We've got a bit of a correction. We don't actually know for sure, but based on the patterns there are some possibilities more on the downside as opposed to the upside, but some correction at shorter time frames. All right. We have got sort of a W pattern there that happened. All right. And that's basically that's what's going on with gold. So based on a daily chart, you were able to look at the pattern as such, and within it, we've got an ABCD there, ending at that area there. But it may be a bit too soon. If it were to be an ABCD, a lazy Z pattern, then you've got correction, and you would see prices being pulled more to the downside for gold. All right. Before I go on to any other pairs, I think it would be the last pair for me to talk about would be the silver. Now, silver, me personally, I expect some moves on the silver because we have got, let me remind you, on the daily chart for silver, we have got quite a nice sort of cup pattern that have already form the handled. Okay, so we have got a bit of a correction here. All right, usually at the mouth area we are expecting prices to bounce out from the mouth area and make a correction before it burst upwards. So let's look at whether or not prices, whether this week, this month, or in the month of April, to actually bounce out and correct, and you've got more likelihood of prices bouncing out upwards more if prices begin to actually peak out of the mouth area to aim upwards. Okay, so that's quite a nice pattern. It looked to me like a pattern that has been mirrored from gold's movement since November. So I've done some research on silver and gold. Silver is seen to be the underdog, where it's always lagging behind in terms of prices in comparison to gold. So gold will show all its glory first, and then silver would surprise you, overtaking gold's prices. That's just a probability. It's a probability game. But then there is a cup and handle pattern, which has been quite high in its probability for gold and silver since October last year until this year. And it's still happening. All right, guys, I'm opening for questions. If you guys have got any questions, I'm going to be ending this webinar very soon. So please, have any questions on any pair, you're free to ask. I'll be happy to help. Okay. All right. Let me see. Let me see which question I should start with first. Nicholas, could we use the same? No. Albator. Albator. Hi, do you have the recording? Yes, I do have the recording for the previous session. Albator, what you can do is that you can send me an email at kenny at orbex.com. Okay, and better still, I will give you another email address. It's because I'm currently on a business trip away at the moment. You can easily send your request for recording to Kira at orbex.com. Kira spelled K-I-R-A, okay? K for Kilo, I for India, R for Russia, A for America. All right. All right, Colin, thank you very much. Have a very good evening. All right, so I think that's all for now, guys. I will end this webinar, okay, and wish you guys a very good week. I wish you guys happy pipping, all right, from all the pairs that you guys trading. Nicholas has got a question. Is there a possible flag and pole pattern breakout Euro JPY in a 1 hour? All right, let's take a look. Let's take a look together. Euro JPY on a 1 hour chart. Let me just erase that all first. We have got that and normal and that. Let's see. File, give me a second. Just want to open a new chart. Give me a second. Oops. Sorry. Okay, let's look. I may have opened Euro JPY earlier. Nope. Nope. Okay. A flag and pole pattern, you say, Nicholas. Let's see. On the 1 hour chart, let's minimize that first. I would think you would be talking about that possible channel. Let me just adjust that a little bit. That has broken out already. Somewhere there, I would guess. And you're looking at a pole here and there, and yes, there is a possibility, but before that, what could we actually do as well is, because each pair can actually behave differently, okay, is zoom in a little bit on the candlestick and look at angles, clock angles first. We have got a clock angle from here onwards. There's a bit of a weakening on the upside. We have got that angle is at 2 o'clock from here to there on the 1 hour chart, right? And go on the 4 hour, we do indeed have got a bit of a strength on the upward. That's a 1 hour. There is some strength on the upside. It looks to me a clearer ABCD at this point here, if it's on the upside here. Yeah, right. Okay. Now that ABCD, if at all we're looking at that move there, it could easily convert into a very nice W-like pattern. So we have got on the upside, instead of a flag and pole pattern on the 4-hour chart for the Euro JPY, to me it looked like it's clearer on an ABCD attached to a W pattern. All right, like what I'm drawing here. So we have got an upside move expected and a sort of a bounce back at this level here at 129.822. Now remember, 0.82 is very close to the A side number, so you want to look at 0.90 and above to only signal more upward move. But if you're actually entering an upward move for the Euro JPY and you are looking at entry, let's say at the crisscross section here, or above it, sorry, above the crisscross section here, then you want to be exiting below the 129.82. That means under the 80, possibly at 129.70 TP area with a possible ideal buy entry above 126.09. And of course, prices is trading at 126.95, so you want that to pass above. So 12710 could easily be ideal for a entry and exit under the 129.82, which is 129.70. Hope that helps, Nicholas. That is the sort of Euro JPY forecast, but I would like you to apply the 3 EMA or averages, moving averages, and try to be sure on the trend side of things based on the 3 time frames. All right, guys, that's all I have for you guys here, and brilliant. Would like to see you again next week. Okay, Nicholas, thank you very much. Okay, and if there's anything, send me an email at kenny@orbex.com. Be happy to help. Now, have a good week, good trading week, and thank you very much. Okay, guys, happy pipping. Bye-bye.